Hello, and welcome to Donut Investment. This analysis is for Astera Labs on NASDAQ as of 31st of July, 2026, with a share price of $317. The full report is on donutcn.ca. True. Astera Labs is a genuinely elite AI connectivity franchise, and its stock trades at roughly 2.5 times its rate-and-growth-warranted multiple into a hostile breadth-narrowing tape. This is a price and risk call, not a quality call. We decline to pay 68 times forward earnings, above where the street values it, with a live AI concentration de-rating tail armed against it. Do not buy on any horizon. First, give the business its due. Revenue grew about 93% year-on-year, gross margin runs near 76%, and the balance sheet is a fortress. Net cash around $1.14 billion and a current ratio above 11 times. Growth of roughly 90% plus a free cash flow margin near 24% gives a Rule of 40 style score around 117, well past the 60 mark that signals an exceptional operator. Astera makes the connectivity plumbing of AI data centers, and it makes it very well. Business quality scores 78. Quality is not why we say do not buy. Now the price, which is the whole story. A disciplined two-stage model warrants a multiple of about 27.5 times earnings. The stock trades near 68 times forward, about 2.5 times that anchor, on a free cash flow yield under 0.5%. To justify today's price, the business would have to compound free cash flow at more than 30% a year for a decade. Our warranted fair value lands near $200, well below the 317 spot, and even the street's own median target of $275 sits below the current price. Valuation scores 29. You are paying up for a flawless future. Two things then stack into a hard no. The valuation ceiling gate triggers on that extreme multiple and caps the base signal at hold. Then do not buy trigger 2, arm B, fires. An expensive name that is a genuine member of the AI CapEx cohort, into a systemic tail the macro report flags as armed. Market breadth is narrowing, not broadening. The equal weight index sat flat while the tech complex ripped about 5.5% in late July, the classic concentration tell. At a binary earnings print on the 4th of August, on a stock that routinely moves 10 to 20% on results, and the expected value for new money turns negative. Do not buy on any horizon. In fairness, here is what makes us wrong. If the AI CapEx supercycle simply runs on, Astera holds its Gen 6 lead and beats and raises through 2026 and 2027, the bull case retests the old high near $475, about 50% above today. This is a genuinely elite franchise with a strong tailwind driver scored 81, and over a long enough horizon, a great business can grow into even a rich multiple. And the tail we fear could quietly disarm. If market breadth broadens and the equal weight index catches up, the concentration risk fades and this reverts to a hold. The upside is real. It is simply not, on our framework, worth the downside from here. Now weigh the risk against the reward. The bull case is roughly 50% above today, the base case, the most likely, about 5%, and the bear case a fall of about 42%. So you are risking about 42 to make 50. So, our call on Astera Labs, on NASDAQ, do not buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donut Investment at donutcn.ca. The link to the full report is in the notes below. Have a great day.